Evan, one of the trends that caught our eye in your latest report is that applicant volume and wages remain stagnant in June, which is a good thing in the fight against inflation, right?
Absolutely. Sentiment was down in the recruiter sentiment, but we saw applications either increasing. 33% actually saw applications increasing. We're seeing compensation still be number one reason, and we're seeing compensation actually increasing.
Why is that? What's driving the compensation increase? I ask as someone who, has a salary.
It's got to be that people are looking for jobs that pay more money. We think people are worried about the recession. They're worried about the economy. They're worried about inflation. And they're worried about increasing interest rates. Therefore, they're taking jobs that actually pay more money. We saw this before. We saw this at the beginning of the pandemic, sort of people actually having potentially two jobs, two full-time jobs. And if you look at the job market, 4 million people still quit in May, and 6.2 million people were hired. So there's a lot of fluctuation going on in the job market itself, and I think people are looking for where they're getting paid more money.
I love that idea.
Remote work is actually
I love that idea about people having two jobs. I can't even handle one job, let alone imagining doing two jobs working from home. And I wonder if, based on what you're saying, the great recession, the great quitting that we've seen over the past couple of years, is that over? Are people now looking for work and looking for high salaries? And we're back to sort of where we were pre-COVID, back into a, quote, old normal?
So we think that that's never actually going to return to the old normal. The quit rates are actually higher than they were on the average of 2019. And actually, if you look at the BLS numbers, they were up in May. So up March, April, May, consecutively up. Over 4 million people quit their jobs in May. So why are they quitting? They're looking for a better opportunity. They're looking for more compensation. Yet, if you look at last month's labor numbers, the participation rate stayed the same. The unemployment numbers went up, but more people were actually taking jobs, or there were more jobs created. And maybe that's actually seeing this return to people carrying two full-time jobs. And again, these are across the sectors. And we look at the recruiter index, and it's really in the sub $100,000 salary mark where we're seeing more participation and more opportunity.
Steve, you wanted to jump in.
Yeah, I mean, there's a question as to whether or not these wages are driving inflation or are they chasing inflation.
That's what I was going to ask.
I don't know if Evan has data on that, but to me it seems like you have people trying to get wages that are commensurate with their increase in cost. So it doesn't strike me that that is actually the driver or the cause of inflation. You may get to that point eventually. The other issue...
As an employee, it feels like your dollar just isn't going as far.
It definitely
because even though inflation might be tempering now, you've eaten that inflation over the past year.
And what would be nice would be to keep those 4 or 5% annual wages and have inflation come down more than that. Then you would be getting real wage gains. The other thing that I keep driving home about, I don't know, again, if Evan wants to talk about this, is if the inflation problem, as Powell suggests, is in the service sector, the only supply the service sector provides is labor. Okay, maybe there's some paper clips, maybe there's some Post-it notes. Obviously, there's software, but that doesn't cost anything. None of that stuff. The only thing that really costs... So it strikes me, when I look at the ADP numbers today, and I see a surge in hiring for leisure and hospitality, I see more restaurants open. I see more workers in the airlines. I see the possibility for inflation to attenuate as a result of labor and hiring. So rather than being our enemy in both cases, I think labor is our friend when it comes to inflation.